to 9:30 p.m., the live exam prep. And today, this week, we're trying to get through Escrow and Title, Chapter 7 of the Principles class. And this class is really great if you're going through your classes right now and you need help and you want to understand information. If there's something that you're going through and you don't understand it in this book or in any class that you're doing, and you have questions, feel free to put them in my comments. I'm here to help you get your real estate license, advance to your broker's license, maybe get your MLO license. Hi, how you doing? Or even better yet, buy or sell a property. So we are in chapter 7. We're on page 191. And it's interesting because I'm reading the book and I know that they're supposed to be teaching you escrow and title, but it actually says the complete sequence of events at the bottom of page 191 is number 1, preliminary title report, search and report, preliminary. Okay, of course, that's one of the first things that the escrow officer does, but it's not the first thing. The first thing an escrow officer is going to do, I know that you really like watching these videos. I need a thumbs up. Come on, we got to keep it going. And so anyway, the very first thing that happens is when you open an escrow, the listing agent's going to send the escrow officer the information. And what's going to happen is they're going to get, the escrow officer is going to look at the purchase agreement. And after they go to the purchase agreement, they're going to write up the escrow instructions. Now, what they're going to do, thank you for the thumbs up. I'm doing great. How about you? And it's just been a really late night because, so some of you don't know that my 93-year-old mom still lives on her own. She's perfectly capable of doing things. The only problem is once in a blue moon, she does fall. And I'm teaching class and she's not answering her phone. And usually I call her in the morning and at night to make sure she's okay, and she wasn't answering. So I had to rush over and pick her up off the floor. Thank God she's okay. But so we're still making it along. And you know, you never know when you're gonna have to take care of your parents. So try to get something set up in advance. But anyway, so back to escrow and title, what I'm trying to stick to, and the fact that we just taught a class tonight. And you know, anytime you're looking at getting your license, ask us about our classes because we teach so much stuff. It's not just passing the test, it's passing the test and more. So on here, we're going through escrow and title insurance. And it says the first thing is the preliminary title, but the first thing is escrow has to be opened. So you get somebody that agrees to buy a property, and then the listing agent will go ahead and send over to escrow the purchase contract. And with the purchase contract, what's going to happen is they're going to draw up the escrow instructions. They're going to give a package to the buyer, a package to the seller, a package to the buyer's agent, and a package to the seller's agent. And we're going to take those instructions and we're going to start following what we need to do. So on the buyer's side, they have to fill out some paperwork that's called the Statement of Information. People look at that and they go completely burko-zirko. They don't know what they're going to do with it. And all it really is your name, your address, your phone number, the places that you worked, everything about you for the last 10 years. What they're searching for is if there's any judgments against you that would be leaned against you when you buy the property. Okay, on the buyer's side. And the buyers also have to figure out how they're going to hold vesting. Vesting is how the title is going to be held. So on the other side, on the seller side, they're going to have to prepare the grant deed and make sure that the sellers have a clear title. And so there's a lot of work to do in between these 4 simple steps. The first step says preliminary title report. Then it says lender's demand. So escrow is going to send over a demand for payoff to the lender, and the lender's going to tell them exactly what they have to pay off in order for the house to be free and clear for the new buyers. The request for the new loan documents on the buyer side, the lender is going to be, the lender is going to be contacting escrow, and escrow is going to ask the lender, when are we going to have the loan documents ready? And escrow is the one who orchestrates all the paperwork, making sure that everything is signed. And usually they'll set up a notary to come out to you. For instance, my last buyers that just closed escrow, she had a baby on Wednesday. They signed their loan documents in the hospital on Saturday, and they're already working on the property and moving in. So it's super crazy all at once. And they asked me if I thought I'd get them the house prior to them having the baby. And hey, we were right there. And then the last thing is completion of the conditions and depositing the funds. So once they sign all their paperwork, there is no right of rescission on a purchase. So they're going to sign their paperwork. It's going to go back to escrow. Escrow is going to make sure that everything is signed correctly and send the loan documents back to the lender. Once the loan documents get back to the lender, then escrow is going to call for funding figures. And the lender will give escrow the funding figures. they're going to fund the loan, record the title, and guess what? The buyers have their new home. So on the next page on 192, I'm not sure if it says all the stuff I said, but it says adjustments and prorations. So the seller will have prorations. If the seller already paid taxes in advance, they're going to get a credit back on the taxes. Now the buyers are going to get a debt, and that debt's going to be their new purchase loan, right? It says transfer of existing fire policies and creations of new ones. And that's a big deal right now because it's really hard to get a fire insurance policy. So some people are getting what's called the California Fair Plan. And when you get the California Fair Plan, you're going to have to also include another plan to cover what that plan doesn't include. I was really lucky. For some reason, I got a really great deal on the California Fair Plan. So my fire insurance was less than about $3,000 a year, which I was expecting about $5,000. So fire insurance is really hard to get. So make sure you start shopping for that with your clients and having them make sure that they don't buy in a fire zone. How about that? And then let's see, it says transfer the policies, recording. So title insurance is a title policy. It says funds, make sure the seller gets all their money they're supposed to get. An escrow statement sent to each party. So at the very end, escrow is going to show who had to pay for what and all the costs. That's your settlement statement. After all these steps have been completed and all other escrow conditions have been met, the closing of the escrow is usually routine. I don't know how routine it is because you never know what's going to pop up. I know sometimes, attachments pop up. I had one where I was about to close and the homeowner did not pay the HOA on a property that she sold 30 years ago. She owed the HOA like $2,500 and it was 30 years ago. And we go to close, and because the statement of information pulled up that lien against her, the guy wanted $30,000. And, sometimes if it's a small amount, I'll throw my commission in and negotiate it. But I wasn't throwing in my whole commission for some guy that had a lien that was 30 years old. So what happened was it was actually a short sale. And I called the lender and I said, I know we worked really hard on this, but I don't know that we can save this now. And he said, what happened? And this was when Mr. Cooper was the company they were before. And so I said to the guy, I told him what happened. And he goes, I actually have a pad on it. I have enough to pay that guy off. So we actually gave that man $30,000. I got my commission. We sold the property. But you know what? What happens is at the end of escrow, which it doesn't say in here, they do this thing called date it down. And what they do is they update everything about the buyers and the sellers at the last minute and see if something pops up. And that $30,000 lien popped up at the last second. Sometimes things pop up at the last second, so they don't just go super smoothly. So it says after all these things happen, it's going to be smooth. But then there's a California Customs for Escrow Service and Title Insurance on page 192, and it says Northern California versus Southern California. So depending on that, it says when are escrow instructions delivered. It says customarily in Southern California, it's a bilateral escrow instructions are signed by both the buyer and the seller just after escrow starts because they each get the package. Customary in Northern California, it's a unilateral escrow instructions and they're given to an escrow officer just before escrow closes. So that's kind of crazy. Who performs escrow services? Escrow services in Southern California are traditionally performed by independent or financial institutions. Escrow services in Northern California are usually traditionally performed by the title insurance companies. And when you use title insurance companies for title and escrow, usually you don't have a tie-in fee. Going on to who pays for the escrow. Escrow services fees in Southern California are usually split 50-50 between the buyer and the seller. Escrow service fees in Northern California are usually paid for ouchie by the buyer. But you know what I have? I have a couple of escrow companies out there. If you write up your purchase contract right, the seller does not have to pay escrow. If you write each to pay their own and your seller uses one of those escrow companies that does not charge the seller, the buyer will pay for their amount and the seller won't have to pay for anything, and you'll save your seller a couple $1,000s. Who traditionally pays for the title insurance? It says, customarily in Southern California, the seller pays for the California Land Title Association policy, which is a standard policy. Hi, thank you for watching. All of you that joined me, if you can give me a thumbs up, I'm telling you, you're going to learn a lot from me. So in Southern California, the seller pays for the California CLTA policy. And customarily in Northern California, the buyer pays for the California Land Title Association policy. So I kind of like in Southern California. And then it says in both North and South, the buyers pay for any coverage above the California Land Title Insurance policy. So if somebody wants an ELTA policy, then they can increase that to the ELTA policy, which is an extended policy. And with the extended policy, you can pay an extra fee and you can have even additional items covered. Now on page 193, it says real estate brokers and conduct, it says real estate brokers can conduct escrow. And that's true. So if you have a real estate office and you want to have your own escrow division, a broker can do their own escrow division, but the only people that can use the broker-owned escrow would be agents that are under that broker. So like as a loan officer, I couldn't use that broker that's independently owned by a broker. I couldn't use that for refinances unless I worked for that broker, okay? I can only use independent corporate ones, or I could use a title company's escrow. So as a licensed broker, you can handle an escrow for a fee if you are acting as the broker in that real estate transaction. This is your personal right, and you should not delegate any duties other than escrow duties normally performed under the direct supervision of the broker. All written escrow instructions executed by the buyer or seller must contain the statement in not less than 10-point font that includes licensee's name and the fact that he or she is a licensed California Department of Real Estate. So you can own your own escrow division. So there are real estate offices that have their own escrow and title division. You just have to disclose it on an affiliate broker disclosure form. So then it says if there's a dispute arising during escrow regarding the distribution of funds, a broker handling the escrow might file an interpleader action, which is a court action. And then it says, how does escrow work? So what we're going to do is we're going to stop right there because it's late at night. I wanted to just make sure that we kept moving forward on chapter 7. And we're going to start on page 193 on who selects the escrow company and escrow rules tomorrow. So those of you who joined us, if you want to watch it, feel free to watch it. You can even fast forward me so you can listen to everything really quickly. But make sure you give me a thumbs up and subscribe. I'm going to teach you everything I can about real estate because there's a lot to know. Have a great evening and thank you for joining. Good night. Bye.